Investing is really no magic. You only need long enough of a time horizon and you need to buy into an asset that depreciates less than fiat currencies are being printed. And this works for many assets. It works for housing, it works for stocks, it also works for Bitcoin. In this video, let's compare those three asset classes because they are pretty lowly correlated. So when one thing goes up, the other thing doesn't necessarily have to go up. They can move relatively independently from one another. So it's great to diversify a portfolio across those three asset classes. Let's start off with housing and let's look at a relatively short time period of the last 5 years. So we didn't really have a crisis in those 5 years, and this might be slightly optimistic, but still let's work with the data and see what would have happened. So okay, the housing index in the US went from 260 to 400 roughly in those 4 years. So intuitively, one would say, okay, you make 53, 54% in those 5 years. But here comes the beauty of property. Usually you don't buy your house outright. You maybe only put down 20%, but you do get the entire gains, right? You get 400 minus 260 in gains. So that's 140, but you only put down 20% of the 260, though that's 52. So on your down payment, if you exclude all the transaction fees, etc., you actually during this time made a 2.7x. Now this doesn't always work, but look at this over the very long term, right? The volatility isn't that massive. But of course, you don't want to overlever yourself. You always want to be able to pay those monthly payments. But that's the beauty of property. You can lever it up massively. You can't lever up Bitcoin that much. You can't lever up stocks that much. And when you manage the risk, then leverage is a beautiful thing. It can amplify returns massively. And so even though this is a crypto channel, I do believe in buying property over the long term as well. You simply just have to buy a unit that stays in demand in the next 5 to 10 years. Buy something in the city center, buy something that doesn't see massive increase in supply that's faster than fiat printing. Buy something that's not that poor in build quality that needs a lot of additional investment to just maintain. If you can do that, then before fees, you have a 2.7xer within 5 years if there is no property crash, which might come, right? Nobody knows. Interest rates currently are pretty high. But yeah, we're looking at the long term. Now 2.7x, that's something that stocks and even Bitcoin cannot provide. But especially if you don't yet have the down payment for a house, or if you want to diversify your portfolio, then stocks and Bitcoin are a very valid way to build up further wealth or to do some risk mitigation through diversification. Now, the average mortgage payment in the US is $1,768. Let's just say for simplicity that half of this is consumption with interest and the rest is actually building equity. So let's compare this to dollar cost averaging into Bitcoin. Half the amount, $884 monthly, over 5 years would have given us 100%. So you put in 53,000, you get out 106,000 almost. Of course, with the volatility that Bitcoin always has. But here's the point, right? This volatility here looks massive, but when you only pay down 20% on a house, then a 20% drop in valuations wipes out all of your down payment. So the volatility in housing, if you lever it up, isn't even that different to Bitcoin, just financially speaking. Those 70-80% drops that we see in the Bitcoin price, they also happen relative to the value of your down payment. You simply just notice it that much because you don't look at your house price every single day. But yeah, these ups and downs, they are not 100% correlated, and that's the beauty. And so then we can do the same with QQQ, right? Tech stocks, a tech ETF. In the last 5 years, the price went up by more than 100%. But if you dollar cost average into it, you of course get a bit less because you don't have all your capital deployed from the very beginning. So again, $884 every month. You put in 54,000, you get out 80,000. a gain of 49%, so roughly half of what Bitcoin made. So that's kind of like the price that you pay by having your funds very liquid, to be able to buy in and sell very quickly, to have relatively low transaction fees, to also have a very low entry barrier, right? You can dollar cost average in with just a few dollars. You don't have any of those advantages in property, but in property you can really lever up. A combination of all of those asset classes is in the end, I think, the perfect recipe. On the one hand, you stay liquid, you have things you can always buy and sell. On the other hand, you can shift around portfolio weightings. So let's say Bitcoin goes through the roof. Bitcoin 3, 4, 5x. Then suddenly your weight of crypto as a fraction of all of your portfolio goes up. And then you can take some of those Bitcoin gains and potentially move them into property, balancing out your crypto portfolio. With your property portfolio, you can also make this balancing with stocks, of course. And by doing that, your overall wealth doesn't fluctuate by 70 or 80%. It only fluctuates by 20, 30% maybe. And of course, in sum, it still outgrows the fiat inflation. So you're making gains over the long term. Let's all stay pragmatic in investing. There isn't too much magic into it. There's also an entire playlist just around topics like this, mindset and strategy, here in the premium membership. That's thebitcoinstrategy.com. Fundamentals of portfolio allocation, managing multiple speculative bets, the steps of wealth building, etc. When to take profit. There are also more tactical videos on how to use crypto DeFi, for example. So if you want to up your game in crypto, if you want to manage your savings a bit more professionally, feel free to check that out, thebitcoinstrategy.com. The link is also down in the video description. More information also in this video over here. Looking forward to seeing you in that video, and thanks for watching this one.